also always advise small business owners, whether it's for an expansion or a startup opportunity, is to try to look 2-3 years into the future. I think from time to time, you might have a small business owner that says, hey, I only need $100,000 to get this business going. And from my experience, more often than not, is that 100,000 goes by rather quickly. So I always try to tell borrowers to think a little bit more to the future, and try to grab what you think you'll need over the next 2 to 3 years in an expansion or a startup scenario versus, I don't like to borrow. I only need this. This is all I have to get.
Oh my
Because what
God.
happens is if they go back to their lender for a second loan and they can't get it, there's easier money out there that somebody can get, but at a very, very high cost.
All right. Welcome to this episode of Main Street FM. Super excited to have some awesome bankers here with me today. And I have Jonathan, I have Jared, I have Martine, and we're going to dive into it. The idea, the concept today is, right, getting into the world of SBA lending. We're going to talk about a few different facets to it and make this as super practical as we can possibly get. With that said, I'm the host, Anabi. I've been in tech for over a decade, bought my first Main Street business over a year ago, learned on the job about some of the problems, and there were times I was lost a lot with financing and know how to talk to. So starting Main Street FM has been a way to pay it forward to reduce the degree of misinformation or not knowing what to do by pulling in bankers to speak and create space to make connections with Main Street businesses. With that said, let's get right into it. Jonathan, you want to start with a quick intro real quick?
Sure. My name is Jonathan. I've been in the banking industry for about 10 to 12 years right now. Currently work at Columbia Bank. I'm a commercial underwriter there. Have plenty of experience in SBA lending as well. Used to work with Jared here on the call too. So looking forward to being able to provide any advice.
So thank you.
Yeah, Jared Shintaku with Arizona Financial Credit Union. I'm the director of government guaranteed lending and help oversee the credit union's initiative to get more dollars on the street via the SBA loan programs.
Martin Cordova with Banc of California. I've been helping small business owners since 12 years ago get access to capital. And now with Banc of California, I can do that with the 7A and the 504 program.
Awesome. Let's go. Thanks, gentlemen. Let's get right into it. So when we chatted initially, right, about the SBA lending process, it is a process that maybe for you guys, you could say is simple, but for those coming to it, right, it's full of pitfalls and frustrations when you don't know the process and what to expect. So first, maybe a disambiguation of it. This can go whichever way, but we can popcorn it. Anyone can jump in from your perspective, but let's scale out a little bit and talk about the SBA. And then we can go from there.
Yeah, Nevi, I can take that to kick off the conversation. So the United States Small Business Administration program was created over 70 years ago with the flagship program with the 7A loan, right? And the program itself was created to allow lenders or to encourage lenders to make loans that they couldn't make on a conventional basis, whether that's due to lack of historical financials or what we might know as a startup, insufficient collateral, or other areas like that, right? So the government has stepped in with this program to provide a guarantee to the lender to allow them to make loans that banks and credit unions traditionally could not do due to varying factors. The program itself has grown substantially over the years, and it's a wonderful tool for small business owners to get into ownership, to start a business, to grow a business.
Awesome. Thank you, Jared.
Yeah, no, I love that. You talk about different things as in like lack of collateral or potentially undesired collateral, right? So being an underwriter now, in my previous SBA experience, I used to underwrite deals where we would finance the purchase of airplanes with no engines, right? So like what type of collateral is that, right? Like how are you going to move that? What is it worth? So, it's very speculative inventory. So having somebody that has the industry experience to run that type of operation, but then also, it's a lot harder to get rid of an airplane with no engines than it is, say, a building or something like that. Another deal that I was able to do on 7A lending was per pecan broker, right? So your collateral is literally perishable items, right? So definitely out there, as long as you know how to employ the program, it can definitely benefit some of the small business out there that typically have the riskier type of operations.
Thank
Yeah, I
you.
agree with them. And that's one of the things that we are here for. We want to let the audience know what all the different lenders look for, how they should prep for it, because everybody has their own appetite and what they can work with. And that's why we all collaborate together to make sure we can bring all that access to capital to the small business owners.
Yeah, it is a labyrinth out there. Like it's presents a really good opportunity for different lenders, but sometimes, right, it's difficult to find which lender makes the most sense. I know SBA has whatchamacallit, lender matching tool. Do you guys all use that, the lender matching tool that SBA has?
I have not personally used that tool. It's one of those things in EB that I think it's a great tool for individuals to go to the SBA themselves and to find a lender that might fit for what they're looking for. But to what Martin had said, right, there's a lot of local collaboration that goes on amongst lenders. The SBA program has what's called the standard operating procedures, right, or what we refer to as lenders as the SOP, which is basically the four corners, the rule book of the program. And as Martin alluded to, is every lender plays a little bit different within that program. So the lender tool that's available through the SBA website can help individuals navigate that and match them with a lender that might be more open to the loan scenario that they're in. But the local collaboration can't be something that's ignored because Arizona Financial Credit Union might look at a transaction a little bit different than the Banc of California or varying lenders. I call it the sandbox, and the SOP is the entire sandbox, and lenders kind of choose how they play within that sandbox.
Yeah, that's good. Thank you. I guess to that end, right? I know there are common deal structures in the SBA space. Are there some like y'all would want to chat about from your perspectives with your banks? Like, what are some common ones that you see typically?
Martin, I think you would be good to start off on this one.
Am I going to be the one that starts everything off? So it just depends. Everybody has their own appetite. Works differently. For example, I cannot help startups. That's one of the biggest ones. I emphasize mostly on a little bit more established businesses, 2 years or older.
Okay, I was gonna ask next.
Yeah,
What
two
is
two
a
years or
startup for you?
older, already somewhat financially stable, that are looking for that expansion. Right. I can lend anywhere in all 50 states,
Okay, nice.
and we tend to work with loans over 200,000. So it's not it might not be the best first impression for the smaller businesses, the startups, but that's where I work with the smaller with other banks that can help me finance them first, and then we can get them to the larger transaction. So it is a lot of communication between all parties and community partners as well. So I think that's one of the things that is crucial.
Actually, I'll follow up a quick question on your end there with startups. Would a startup, because typically with an acquisition loan, right? For example, if I was acquiring a business that's already established. So in my case, I bought a 12-year-old, it's 13 years plus right now. But when I bought it, it was a 12-year-old business. I needed to set up an LLC with my own EIN and all of that stuff. So technically, right, that's a new business. But I was buying an older business that's been around for 12 years. So for your risk structure and for deals you evaluate, does the length of the business being acquired play a part at all? Or are you just looking directly at the entity I'm using to get the loan?
No, definitely we want to take a look at what you're purchasing, making sure that it's established, that it's consistent cash flow or income, and that you're buying something worth your money. I've seen very crazy valuations on some of these businesses that are up for sale where they want to sell the business for 1 million, but it's only showing 1,000 on the taxes for profit. So I do not get sometimes where they get this amounts, but it's very common in acquisitions.
Okay, that's helpful. Thank you.
Yeah, so I'm right now. I'm currently out of the SBA game, but like Martin and Jared have both said, each bank likes they have their own sandbox, right? As Jared breaks it out. So the one good thing about something that Jared had mentioned was the communication that each of us have whether we're at Arizona Financial or Columbia or Bank of California or any other bank out there, right? We all talk to each other in the industry and we figure out what those sandboxes look like. So if there's something that I can't get done, there's a Jared out there or a Martine out there that I can say, hey, I know that your bank likes this. And so this is something that like it's a easy introduction to them. And you're putting the small business owner in a better position than just going out there and looking for some random lender, right? So
Yeah.
what Jared had mentioned is very, very important in regards to finding the local lender and the communication they have with our competitors out there.
Thank you.
And Amy, to your point on how an acquisition would be looked at for a business that's got 10 plus years of a history, right? And a new buyer coming in. I think it's critical for a buyer also to understand that a lender is going to be looking at experience, whether it's direct industry experience or something that could be deemed transferable experience. So you'll always look at the history of the business, to Martin's point, to see if there's cash flow there to service the proposed debt. But just because there's cash flow there to service the proposed debt, if you have a buyer coming in that hasn't been able to demonstrate that they have the appropriate experience to take that business forward, the lender might have some pause to say, well, buyer A, how do you really plan to operate this manufacturing facility?
Yeah, makes sense.
Right. And just because somebody might not have direct experience, that doesn't necessarily mean they can't acquire that business. But you might have to look at the loan structure, right? And maybe ask that seller to carry a larger portion of the transaction to support the buyer coming in to take that over and move the business forward into the future.
Gotcha. Makes total sense. And I think a perfect segue too into the question of risk, right? How underwriters look at risk. That was something else we're going to chat about real quick because I know it depends on so many factors and the risk appetite of that bank and the industry. But if you will, you can jump in like for risk. I know there's the experience in industry, is a business making money, healthy cash flow, but are there other things that you might be willing to share?
Yeah, for sure. So in regards to kind of different risk, right? We're always going to look for cash flow for repayment, right? So as a business making money, can it service the debt? Because if you're looking at a business acquisition per se, that debt doesn't exist until the business is acquired, right?
Yeah. Yeah.
So if the can the business service that debt on a go forward basis based on historical performance and also projections, right? Another thing they're going to look at is collateral, right? There's a big difference between, say, buying a CPA firm or buying a manufacturing company, right? So, what assets does the company have itself to be able to back it up? And then also, what industry do they operate in? That's another one, right? The conditions of that said industry. There's some industries that are preferred over, say restaurants or stuff like that. There's a lot of lenders that are out there that will do restaurants, right? So it's not anything to shy away from. And then, one thing that I always see people, right, when they're looking to get an SBA loan, they've got to know that a certain threshold, right, you've got to be willing to pledge your personal residence if it has 25% or more equity in it, right? So if the bank is willing to go out there and put a million up to $5 million loan on this business acquisition for you, you should be expected to be ready to do that on your house as well, right? And that's a thing that some people will be like, well, I don't want to risk that, but well, then why are you asking the bank to risk that if you're not willing to risk it, right?
Yeah.
So that's one of the tougher conversations to have with people at times, but it's just that's kind of the pay to play that you have to do if you're looking to get the bigger loan size out there.
Makes sense. Thank you, Jonathan.
Yeah, and Jonathan is making a good point because I constantly see that where they're asking for all these larger amounts and they don't want to pledge anything personally. And they do have to be aware that it's a personal guarantee on that loan. So you're going to be tied regardless because at the end of the day, you're the beneficiary
Yeah.
of that business.
And another thing that comes to mind, right? What are some creative ways you've seen for, because I know you can finance part of it with SBA loan or other kinds of commercial loan structures, your down payment, and then seller carry. Like, are there other things y'all have seen in the industry from your experience that could be worthwhile?
In terms of creative structures to help get a transaction completed.
Yeah.
Yeah, I mean, from time to time, you might encounter a small business owner who might be light in cash. And in lieu of cash, they might be heavier in assets such as real estate, right? Where they may or may not have one or two properties that they own free and clear. And from time to time, a lender can utilize that equity in a property towards the project down payment. Now, there's certain caveats that a small business owner might have to do, right? I mean, if we're planning to use equity contribution in the form of real estate in lieu of cash, that property is going to have to live on the business balance sheet if we're planning to utilize that in lieu of cash into a transaction. Outside of that, it's typically cash in from the buyer and then maybe some form of a seller carry note. The seller carry note can account for up to 5% of the equity injection for a small business loan, so long as it meets certain parameters, i.e., the loan has to be on full standby for the term of the loan. What that means to a small business owner or to a seller is no payments of principal or interest made at any time on that loan if we're going to count it for equity.
Interesting. So if it's a 10-year term, it matures at the end of that term. That's when it kicks in.
That's when that seller should start to receive their payments,
Okay,
right? Either
gotcha.
at the end of the SBA loan term or as soon as that small business borrower pays it off.
Gotcha. Okay, thank you. That's interesting.
Another cool thing, I'll give you that with the most recent SOP,
Yeah,
they allow for partial buy-ins now, right? Where previously it was like a full, complete, you've got to purchase 100% of it. Well, that's not the case anymore. So, more and more nowadays, you'll see where sellers potentially can get a little bit creative on that end, right? Sell a large portion of their company, maintain some ownership, not only get, the cash flow up front in regards to the sell of that, but then continue to earn, earnings throughout the company, whether it's through wages or through, profitability of the company going forward. So that's something that's really unique and can help, kind of to Jared's comment earlier, right? Where somebody's lacking industry experience. Well, if they've got, say, financial experience or some other industry adjacent experience, that could potentially help a lender get a little bit more comfortable with the deal, knowing that the owners that have been running that company, say for 12 years, are going to be on there for a while, if not forever, and they can step in and help out whenever needed, right? So that's definitely something that has changed over my experience in the SB industry.
that's a good one. Thank you.
That's a great point that Jonathan brings up with the partner buy-in component, right? I mean, I think the government and the SBA have recognized that there's a large transfer or potential transfer of wealth or small businesses with the baby boomers set to retire. And not everybody's equipped to take on 100% of the ownership of a business.
Yeah,
So they've allowed for the partner buy-in component. I think one of the caveats that was recently changed, right? I mean, anytime there's different administrations who oversee these programs, the pendulum swings both ways in terms of how these programs work. So, in a scenario where, say, a NEB wants to go buy 95% of ABC Incorporated, and the sellers have agreed to maintain ownership of 5%, in the old SOP, those sellers would not need to sign a personal guarantee and they'd be able to maintain their ownership. With the most recent SOP, you can still do the partner buy-in, but the sellers are required to personally guarantee that loan for at least 2 years. And
that's
these are little changes that have happened that, Jonathan, Martin, myself, we keep up with, right? For listeners or viewers of podcasts like this, so they understand that there are many ways to get into a small business. You don't have to buy it all. You can buy
Yep.
some, but there are different changes that have happened that the sellers need to be made aware of as well, preferably earlier in the process, so everybody has transparency of how this loan will need to work to close.
yes. There is a lot to unpack there with the new changes for folks to understand because it's yeah, that's good shit. Thank
So, or two or
Is
three.
Yeah.
Yeah. I do see a lot of businesses getting more creative. I think I read about a bar recently that did the sold equity stake in the business to help with cash flow, and that's another way where you can go get a loan from a bank, or they essentially sold a portion of the business to their patrons, who some of whom had been coming for like a decade plus. So that's another thing I'm beginning to see of creative ways to raise capital. Usually you think about raising capital, right, for VC funded, firms, you're gonna have to a high growth startup. But I'm beginning to see that at play even for Main Street type traditional businesses, and get some investors on board who own a portion of the company, and they can help them weather the storm. We have very interesting macroeconomic and micro economic pressures going on right now, and a lot of businesses are feeling the squeeze.
No, that's a good point, Andy B. Right. So you gotta think like a lot of people they use their businesses right as kind of like personal cash flow, right? They bleed a lot out of the profit, but more and more nowadays, like you got to leave some of that stuff in the business, right? So you build up the business balance sheet because at the end of the day, it's either coming out of your personal pocket or your business pocket,
Yeah.
right? Which if you take it out of the business, you've probably already paid taxes on it, and then your credit profile for your business is a little bit riskier if you bleed of all the capital
Yeah.
because you don't have anything in it, right? So instead of, for example, where you mentioned where the business went out and sold ownership to do a cash flow raise, was probably because they're not modeling their cash flow projections savvy enough to say, hey, I need to keep X in this in case COVID happens or in case I need to go out and buy another company to grow through expansion. So it's really important for people to kind of think of that process way ahead of time because if you come across an opportunity, oftentimes it's kind of you're behind the eight ball, right? And you've got to kind of
Yeah.
like figure out what to do. So
Yes. And I
Yeah,
want to
and
lean in on that too, to the degree, maybe add it to the show notes or even share with the community. Like, we want to share practical tools too for doing simulations like that, whether it's an Excel template or Google Sheet or whatever the heck it is. To the degree that we can, I want to start sharing those, because a lot of times it's like, how do I start? Or I could hire a financial person, but who do I even talk to? But that's something like I'd like to explore further for tools like that to help.
yeah,
yeah, for sure.
to Jonathan's point, I do see that especially on the smaller businesses, the startups, the mom and pops, that they tend to take all the profit out of that business. And at some point they come to you saying, hey, my business is profitable, it's making X amount. And when you look at it, I'm like, yeah, but all the profit actually becomes your salary, so you're leaving it empty. There's nothing there to fund or to help you
Yeah.
get the real estate or the equipment. And that goes along into the best practices, right? You always want to make sure you have those 3 to 6 months of savings just in case.
Smart.
But it's very common to see that.
Yeah. Thank you. Thanks for sharing that. What are some thoughts you'd share? I know we're coming on time here shortly, but what are some thoughts you'd share with those on the precipice, right? Looking to acquire a business, or already in a business and looking to expand. Now, obviously, we're talking about SBA. We're going to have other episodes talking about other financial structures, but on the SBA side, particularly if you have general advice, what are some things you'd like to share with those listening?
Have
Yeah,
your
I
financials ready.
Yeah,
Yeah.
I would say, obviously have your financial package as ready as it possibly can be. But if you have a relationship at your current financial institution with a small business bank or an SBA bank or business banker, start the dialogue earlier in the process, right? So you can understand if you're a first time borrower, what's going to be asked of you to put together. And I also always advise small business owners, whether it's for an expansion or a startup opportunity, is to try to look 2, 3 years into the future. I think from time to time, you might have a small business owner that says, hey, I only need $100,000 to get this business going. And from my experience, more often than not, is that 100,000 goes by rather quickly,
Yes.
and then they have to try to go back and get a second loan, and trying to get a second loan in a short period of time is not always the easiest thing. So I always try to tell borrowers to think a little bit more to the future, and try to grab what you think you'll need over the next 2 to 3 years in an expansion or a startup scenario versus I don't like to borrow. I only need this. This is all I have to get.
My
Because what
gosh.
happens is if they go back to their lender for a second loan and they can't get it, there's easier money out there that somebody can get, but at a very, very high cost.
You know, I'm laughing because that's literally what happened to me, right? I was being more conservative with my cleaning company deal. It's like, I don't need that much. And what I realized, sometimes reality, or many times reality will kick you in the teeth. You have all the simulations and you just think, like that I did not project or account for, like a business profile, Google business profile being offline for about 7 weeks and the dent that I made to revenue. So now my model, I'm like, there was no scenario I thought about that. Right. And I realized shocks like, 6, 7 months in, like we actually need more cash flow.
Mhm.
And, obviously bank is like, well, we just lent it to you 6 months ago. What are you talking about? So there was that. And then I had to get other financing, higher interest rate for a line of credit, which costs like $2,000 a month to debt service. So it's just like, oh my gosh. Case in point, I'm a prime example of what you just shared. That's why I was laughing because I'm like, yep, you've seen this. It's not your first rodeo. You've seen this. Y'all have seen this happen a couple of times. And that's one mistake, right? Many, maybe even first time acquisition entrepreneurs make. It's like, hey, I only need this much, right? For 1 year. Cause I'm like, you're like, worst case scenario, like we're going to make more revenue. I'm going to turn on the pixie dust of marketing and blah, blah, blah. And it's going to grow. Reality is there's just a lot more variables, sometimes outside of your control. So I like the advice of, one, obviously getting books ready, but also making sure you can project a little further ahead, 2, 3 years as a buffer. And if you don't need it, great. You're still covered, but it's nice to have it available if you do need it.
Yeah. So in regards to that kind of information, right? So SBA loans that are typically like the 7(a) stuff, non-real estate, you're gonna have them for like 10 years or less, right? So
Yeah.
no prepayment penalties, right? So kind of like Jared's saying, do your homework, make sure you're asking for the right amount. That way, every time you get a loan, right, or at least in the all business assets, right, with your 7(a) loan, they're taking everything. So when you go to apply for a second loan, there's nothing left to take, right, on top of what you already have. And so that's why, you end up having to turn to alternative lendings, which, like you mentioned, can cost you an arm, a leg, if not your kidney as well. So very, very important to do that. But another thing that we had kind of discussed early on the call, right? And Jared just mentioned, if you've already got an existing relationship with your bank or your banker, right? You don't want to just know the people that are like at the teller line when you go in, right? You want to know the banker that's there that gave you the SBA loan. The one that's behind the scenes if they're not out and about in front of you, right? You want to
Yeah.
get to know them really well, but also lean on your CPA, lean on your business lawyer. There's a whole network of individuals that are around you. And if you don't have those, reach out to anybody on this call, right? We can provide you some great introductions
Amazing.
because what business owners are good at is running a restaurant or running a gas station or, creating metal shelves, right? That's what they're good at. And you don't know what you don't know. So you need to surround yourself with like a whole team of experts that, yeah, do their services cost? Yes. But at the end of the day, they're going to end up saving you money and you're going to be able to concentrate on focusing what you're able to do. So I would, aside from getting to know your banker really, really well, right? They should be kind of invited to your kids' birthday parties, all that stuff, right? But
Yes.
get to know the other individuals around you that can help alleviate some of that stress so you can focus on really what you're good at.
I love that. Thank you so much. I appreciate y'all. Thank you so much for coming on the Main Street FM podcast, where we provide practical tools, advice, resources for businesses in the Main Street space, but also create opportunity to connect with good vendors, good lenders, good financial institutions serving this space. So I appreciate the gift of your time, and hopefully this is the start of several more conversations. I feel like we could do a lot more deep dives in some of these topics.
Thank you, Nevi. It was great talking to you guys.
Thank you.